Hello everyone, and welcome to today's special economic report.
Welcome to the 2026 February 2nd edition of Easy English Training News.
Today, we are looking at a major event in the world of global finance that began in late January 2026. For decades, the Japanese bond market was known as one of the quietest and most stable places in the world. However, that peace has ended. The Japanese government bond market, or JGB market, has experienced a sudden and dramatic crash. This event is sending shockwaves through every major stock exchange from New York to London. To understand why this is happening, we first have to look at the political situation in Japan. Prime Minister Takaichi recently made a very big announcement. She called for a general election to be held this February. Along with this news, she promised a new economic plan that includes spending a lot of government money and cutting taxes on daily items like food. While this sounds good for citizens, it made professional investors very nervous. They began to worry that Japan would have too much debt and might struggle to pay it back in the future. Because of this fear, investors started selling their Japanese bonds as fast as they could. In the world of finance, when people sell bonds, interest rates, which we call yields, go up. For the first time in over 30 years, interest rates in Japan have jumped to incredibly high levels. Specifically, the interest rate for the 40-year bond went above 4%. This might not sound like a large number, but for Japan, it is a historic change. For a long time, interest rates in Japan were near 0%. This sudden jump means that the old rules of the Japanese economy are breaking. But this is not just a story about Japan, it is a story about the global money map. Japan is one of the biggest creditors in the world, which means Japanese banks and insurance companies own trillions of dollars in international assets. Now, let's look at how this affects international stocks. For years, because interest rates in Japan were so low, Japanese investors put their money into the US stock market to make a profit. They bought shares in famous technology companies like Apple, Microsoft, and Nvidia. However, now that interest rates in Japan are rising, these investors are changing their minds. They realize they can finally make a good profit by keeping their money at home in Japanese bonds. As a result, they are selling their American and European stocks to bring their cash back to Japan. When these big players sell all at once, stock prices around the world begin to fall. This is why we saw the Magnificent Seven tech stocks lose value recently. The world's stock markets are all connected, and right now, Japan is pulling the strings. This brings us to the most complicated part of the story: currencies and the carry trade. For a long time, the Japanese yen was very weak. Traders used a strategy called the yen carry trade. They would borrow yen at a very low interest rate, change it into US dollars, and then invest that money in higher paying assets elsewhere. It was like getting a very cheap loan to go gambling. But now, because of the bond crash and rising interest rates, borrowing yen is becoming very expensive. This cheap loan doesn't exist anymore. Traders are now rushing to pay back their yen loans all at the same time. This is causing the yen to behave in a very wild way. At first, the yen hit a low point of nearly 160 against the US dollar, but as the carry trade ends, the yen could suddenly become much stronger. This volatility makes it very difficult for international companies to plan their budgets. In conclusion, the quiet era of Japanese finance is officially over. What happens in Tokyo no longer stays in Tokyo, it moves through the digital veins of the global economy instantly. The upcoming February election will be a turning point. Investors will be watching to see if the Japanese government can stabilize the market or if the chaos will continue. If you have money in a retirement fund or own international stocks, you must keep a close eye on Japanese interest rates. The world of money is changing, and Japan is at the center of the storm. Thank you for joining us for this report, and we will continue to bring you updates as this situation develops.